Okay, folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond over at the Contrarian Trader and the 29th of March. So, in a couple of days, we're going to have Q1 2020 in the books, and I want to talk about some historical charts, S&P 500 in particular. I want to talk about the gold mining sector. And of course, we'll take a look at the economic data coming into next week. And first, what I want to do is say, hope everybody's safe, number one. Number two, thanks for joining. If I could ask you to hit that like button, it really helps me out. I'd appreciate it very much. The channel's beginning to gain some steam, and I'm really excited. So hit that subscribe button, and I really appreciate it very, very much. Frank, I got your email, read it, extremely disturbing. 27% of Italy's corporations are now owned by the Chinese. Did I read that right? Is that accurate? I did a cursory overview of the article. Long Island is doing horribly well. The hospitals are overloaded. A lot of the folks that live in New York City came out to the island, went up to Westchester County, and it blew up. Many of the hospitals are overloaded. We're not doing well at all. Terrence, hey brother. Sam, hello. How are you doing over there? Sam's in Northern Italy. Pat, good to see you. Eric, good to have you on board. Yeah, I think like Warren Buffett says, you see who's swimming naked when the tide goes out, and a lot of there are going to be a lot of naked people out there. Let's kick things off, folks. I just want to do a quick review of the futures action. Let's go to the S&P 500 first. We're down, no great shock there. But we're already off the lows of the session. Here's my tripwire. I'm not going to get nervous about this pullback until we break down below the support level. So right now at current, we're down just shy of 2%. We were down lower. We're going to revisit this yet again. Let's take a look at the dollar, which had a horrible week last week. We're down yet again. We're off the lows of the session, but still under a tremendous amount of pressure. Gold. Gold is up. It is breaking out. We're off the highs of the session, but we're only a couple of minutes into this. 3 minutes to be exact. Let's take a look at some commodities. Nat gas, down, off the lows of the session. Palladium, which recovered real big last week, consolidating, it's down a little over a percentage point. And again, folks, I'm not going to spend too much time here. Let's let the futures market settle it down here. For all I know, we could be green tomorrow morning. But we're going to talk about bear market rallies, because the key name of the game as we proceed into this new trading week is for me to continue to hammer home we're at a new normal, right? We have to get over that obstacle, that especially for those that haven't been trading a long time. We need to get over the fact that the bull market is over. It's dead. It's gone. On to the new bear market. We'll get ready for the new bull market. And once we get over that obstacle, that hurdle, we can make some money. But you have to stay solvent. Yields are dropping as the 10-year Treasury note continues higher. We have an inverted head and shoulders setup here on this 4-hour chart. Left shoulder, head, right shoulder. Here's our neckline. Clearly and decisively broken. platinum. Consolidating very, very nicely. We called the breakout on platinum a couple of weeks ago. It's doing very well. And it looks as though we're going to make a charge for these resistance levels above. So platinum looking good as we proceed into the new trading week. I just want to take a quick look at soybeans. I'm keeping an eye on food prices. And soybeans are up. And we are consolidating. And what we're going to talk about tonight, folks, I mentioned earlier, bear market rallies. I also want to talk about the catalyst that we're looking for to drive the gold mining stocks higher, because there's been a divergence, right? You have gold, which has really held its value, whereas the gold stocks, they're trading along with the stock market. We're going to discuss why what the key correlator is for the gold stocks. Is it the S&P 500? No, it's not. It may look that way at current, but it's not. Is it gold? No, it's not. It's clearly a disconnect there. I'm going to tell you what that key correlator is in a moment. So bear with me. And let's get to, we'll come back here in a moment before we wrap up. I'm going to go over some member stock chart requests as well. We have a lot to get to. I don't know how many other stock charts I'm going to be able to get to beyond what was already requested. So, economic data. We're going to breeze right through this. Last week, horrible. And it's going to get worse. PMI data, below 50 on manufacturing. Services, 70% of our economy is services, 39.1 versus a prior read of 49.4. Durable goods, actually better than expected, but that's not going to last. Jobless claims. This is just a drop in the bucket. The prior read was 282,000 new jobs. It's been in that ballpark for a while now. Last week, the cover was knocked off the ball. Nearly 3.3 million new jobless claims. We're going to get that again this week, probably a higher read every Thursday that comes out. This coming week, we have the Chicago PMI, that's the Purchasing Managers Index. Expect that to tank. Consumer confidence, that's going to roll over. ADP employment, that's going to take a hit. The question is, as these numbers roll out, are they shocking to the market, or is the market already priced them in? ISM manufacturing on Wednesday. Construction spending, forget that. Thursday, jobless claims. Factory orders, that's going to take a hit. Non-farm payrolls on. This is the pimp Mac Daddy of them all. That's the key economic data point that you want to keep an eye on. We're getting it on Friday. So we have a ton of economic data. Perhaps the markets are going to give a pass to all this economic data because it's expected. It's priced into the market. It should be, you would think, but you never know. So we expect bad. The question is just how bad will it be? So let's get to some optimistic news that's potential for the market. Trump administration plans 3-month suspension of import tariff collection. We'll see whether or not that becomes reality. That may put a bid under stocks. What may put a bid under oil? This came out a short while ago. Saudis claim U.S. Patriot missiles activated in major Yemeni Houthi attack on Riyadh. Remember, it was only a few months ago where you had the missile attack on one of the major refineries over in Saudi Arabia. And you saw a spike in oil. It didn't last, but perhaps we'll see a bid under oil if this begins to escalate. I'm going to go over some quick comments here. A lot of comments. Wow. Nicholas, hello. Red Sox, well, can you talk about pension rebalancing as opposed to prop up the market? That was, yeah, there was talk of that. Here the situation is improving. Oh, good to hear, Sam. Good. What's going on? First time. Big dip. Gammon's pretty good. Well, the tankers he likes because there's going to be a storage issue. We're running out of storage space. So they're going to use tankers as storage facilities. 40,000, what do you think about the prospects for inflation down the road? I'll go over that in a second. It's a good question. What are your thoughts about Atkins' dance on CNBC? I don't want to say that he was talking his book. He would never do that. What did he do? Make $2 billion on his shorts? Hello, Bob. I'm 85% cash. Good for you, Craig. All my long-term IRA and 401k. How would you go about putting that money back? Right now, I'd be satisfied with just sitting in cash right now. Granted, the dollar's taking a hit, but right now what we're doing is we're looking for either a higher low. If you're looking at stocks, we're looking for a higher low on the stock market. I don't know whether or not you're able to short with those, with your IRA or your 401k, whether with a leveraged ETF or a short ETF, or whether you could short outright in your IRA. But you may be looking at an opportunity here to at least put a piece of it to the short side. By no stretch of the imagination would I say go all in with your retirement account on the short side. But if we begin to break down to new lower lows, either this coming week or in coming weeks, and I'm going to go back in history to show you what a bear market rally might look like. There are a couple of different ways it may play out. I'm going to go over the weekly charts historically to show you what I'm talking about. So, Craig, right now, cash is king. What do you think about Tesla at 285 and 1850 on the S&P? That's the 1850 numbers is about my long-term price target on the S&P. I don't think it's going to happen overnight. I think that's going to take time. Yeah, it's definitely possible. Tesla, I'm not too sure about. I need to take a look at the charts, and it's a very high beta name. I need to take a look at the charts and do a little bit more of a deep dive on it. But the S&P 500, I'm comfortable with that figure. The reason is that we are still at current. If you take a look at the lagging PE of the S&P 500, we're just off of expensive, right? We're between being expensive and being fairly priced. That doesn't take into consideration what earnings will be this coming quarter. We're probably going to be overvalued yet again. So that is really one of the proximate reasons why I think that the 1850 level longer term on the S&P 500 is certainly achievable. Now, taking a look at historical data and getting back to that pension rebalancing topic, they put things out there like that. You rarely hear about it. I'm no expert on that. I'm not going to sit here and pretend that I am. I would love to say something intelligent if I had something too intelligent to say. If I don't have something intelligent to say that's going to add value, I'm going to tell you, I don't have anything intelligent to say, and I'd rather not make myself look foolish. And if somebody has something to add of value, I'll certainly take a look at it, read it, and give it my second opinion. But right now, all I'm really doing is I'm looking at the charts and I'm trying to extrapolate out from the past what will probably happen in the future. And that's where my comfort zone is. So let's take a look at that. So we'll take a look. First, I want to point out something. And I was taking a look at this over the weekend. For those that are not familiar with technical analysis, I like to go back in the past to help identify where we may be going in the future. It's all about probabilities. There are no guarantees, right? So as we close out this new week, we will have closed out Q1 of 2020. So a lot has happened so far in the 3 months of 2020. It's really amazing. So far in the first 3 months of 2020, we have made a new yearly high, and we've also made a new yearly low. We have fully engulfed. This is a bearish engulfing of 2019. Again, S&P 500 yearly chart. This has only happened a couple of times. This chart goes all the way back to 1925. It happened back here in 1937. After that, 1973, that was the Arab oil embargo. And here we are yet again. In all of these cases, we have put in a new yearly low if we close out the year at current or worse. So this is very, very bearish price action on a yearly basis. Now, we need to keep something in mind as I talk about this. This is Q1. For all I know, we can close up on the year. Right? It's improbable, but for all I know, we could do it. It's an election year. They're pumping tons of money into the economy. What do I know? So I need to keep an open mind. If we do flash a bullish reversal bar, and in all probability, we'll head higher. The probabilities of us doing that are quite low. And we're looking at the yearly charts already to identify where we might be going in 2021. Now, this is a weekly chart walking us through the breakdown of the financial crisis. And each one of these arrows represents a bear market rally, and they are ruthless in nature. Last week we had the biggest back-to-back rally in the S&P 500, the Dow Jones Industrial Average, since the Great Depression. Many out there might be thinking, wow, the Federal Reserve to the rescue. We're good to go here. We're locked and loaded for a new bull market. I highly doubt it. Don't get lured into a false sense of security. Check out some comments here. Futures dip, yep. Trump extending social distancing through April 30th. No shock there. How bad is NYC? Refrigerated semis brought in to hold bodies. No shock there. It's very sad. Banks are screwed with many bad debts from consumer credit cards. That's going to be a big issue. Yeah, we thought we were loaded up with consumer debt back here in the financial crisis. We're worse now. But for those that are making, under $75,000, you're going to get a $1,200 check. Congratulations. Helicopter money's here. So back in 2008, back in 2009, everybody thought that we were seeing the bottom until the bottom fell out and we went down lower. Don't get lured in. So if you're sitting in that cash right now in your 401k and your RRA, be happy. Be happy. Sleep at night. You got to be able to sleep at night. So the market will send us a signal. It'll let us know when the bottom is in. It hasn't sent us a signal yet. Now, you may look at this chart. This is a current day chart of the S&P 500. Here, beautiful outside reversal week last week. What did we do? And I went over this on Thursday night. I said, beware. We have the 200-period moving average that's going to act as a resistance level. Where did we close out the week last week? Right down below it. Now, two things can happen here. One, like in prior breakdowns where we saw a counter trend move, like back here in the week of the 2nd of March. We faded, we broke down to new lower lows. The same thing back here. I'll come back to this one for a reason. Let's just stick with this because I have so much to go over here. All right, so we could either do one of two things. Do what we did back here and just break back down yet again and proceed to either A, move down and put in a higher low, and then move up higher, maybe. Or we could just weaken up, take out last week's lows, go down to that 1800 mark, 1850, where I think longer term support is going to be seen at. Or we could do this. Remember that this is an election year and there is a ton of liquidity that is being pumped into the system. The Federal Reserve bailed out a bunch of hedge funds last week. Think about it. They're worthy of your tax dollars. When did they ever send you a check? I digress. So what we may do here is this, is we broke down back here in March of 2018. And what we did is that we limped back up. And what was the prior lower band of support became the upper band of resistance until such time that we entered an ascending wedge formation. And at some point in time in the ascending wedge formation, you reach a pinnacle. And you either A, need to have a resolution. Either you're going to break out or you're going to break down. So what could happen is that we limp up, forming an ascending wedge formation, and you're going to think we're in a new bull market, and they may call it a new bull market. It'll be a short-lived bull market until such time either we break out or, as I believe that we will do, break down and then proceed down to new lower lows. So if you're thinking that this sell-off is over, folks, please just simply take a look at history. History has shown us time and again that 1 week does not make a bottom. The yearly chart is telling us at current that we have seen unprecedented volatility in the markets, and we need to hope for the best but prepare for the worst. So, Craig, you're sitting in cash. Pat yourself on the back, brother. You're doing great. Okay, let's move on. I want to talk about gold. This is a story that was published today on Zero Hedge, but I've been talking about this for a couple of weeks now. So it's kind of like an old story that nobody's paying attention to. Nobody. Gold, you can't get spot. You can't get gold coins. You can't get silver coins. We own silver. We own the gold miners. I want to buy more. But the point of the matter is that gold is holding its value. It's not going down, but it's not going up either. So the focus of the market right now is on liquidity concerns. At some point in time, the focus is going to turn towards the fact that there's no gold out there on the spot. There's no silver on the spot market. And at some point in time, price is going to have to reflect it. And it simply doesn't right now. And you have 25 to 27% of the miners that are offline at current. So this is catalyst number one for gold, the miners, silver. Number two, this is a chart of the Federal Reserve's balance sheet. This is not a bad tick. This is reality. We have blown past the highs of the financial crisis and the unwinding. We're well past that now. We are in Alice in Wonderland area now. So here's a 5-year view, and this is only going up higher. 1-year view, it's incredible. 10-year view, max. I mean, this is just incredible. And you can see similar price actions to what we saw back in 2008, and it was simply up, and away from there. So we're just at the beginning of this, folks. So that brings me to the gold miners. This is a quarterly chart of the gold mining index, the GDM, if you want to bring it up at home. Now, the GDM, on this chart anyway, goes back to 1995, perhaps even further. Let's see if I can do that. I did 25 years. I don't think I can get 40 years here. No. Okay. Let's go back to 25. All right. So overlaid here in black, I have the yield curve. Now we know that the yield curve is going up. It's steepening, right? So this is the steepening of the yield curve. What do the gold miners do historically? They rally with the steepening of the yield curve until such time as the yield curve tops out, and then you begin to see a pullback in the gold miners. But we have that box checked. So we have no gold out there, no silver out there. We have the Federal Reserve's balance sheet ripping through the ceiling. We also have, somebody brought up inflation earlier. As we measure inflation here at the Contrarian Trader, all I want to do is take a look at the tip market. Let's go to 5 years. We had a shock of deflation. Then everybody woke up to what was going on and how inflationary what the Federal Reserve was doing was going to be. And you had a massive bullish key reversal bar on the TIPS. Those who are not familiar with the TIPS, Treasury inflation protected securities. Institutions will buy them to protect their portfolio against inflation. Look at the reversal of this downward move. Incredible. So check that box. We have fears of inflation out there. Now, betting on a move. I know this is a busy chart, but bear with me. I'll walk you through it. Betting on a move of an index diverging away from the S&P 500 is a bold statement. I'm well aware of that it's a bold statement, but we have historical precedents, and this is what I'm about to go over. So what you're looking at here in candlestick is the GDM, the gold mining index. Then you have in red overlay. Let's clean this up a bit. Let's get rid of these Bollinger Bands. And the moving averages. That's better. Much better. Okay. Cool. All right. So we've been talking about and researching what will the GDM, what will cause the gold miners to rally, or what is preventing them from rallying at current. When you have all this in place, everything that's good for the miners is in place. The US dollar tanked last week. And yes, the miners rose, but not as much as you might think. The S&P 500 rallied. The gold miners did okay, but not as well as you might think. There's no gold out there. There's no silver out there. The problem is that you have volatility. The VIX is preventing the rally in the gold mining stocks. I don't make this up. It's what history has shown us. And when we peaked out back here, when the VIX hit, I don't know what this number was. It was high. When the VIX is high, you got to buy, right? We saw a bottoming out in 1998 of gold. when the VIX corrected, then you began to see the gold miners move up higher. Fast forward to this grayed out area here, and this reflects when you had a divergence. This is the dot-com bubble, right? So you had a spike in the VIX. You saw the gold miners pull back, but then as the VIX made lower highs and came off, the gold miners ripped up higher, and the S&P 500 rolled over. So you had that first case, on this chart anyway, first case of the gold miners diverging positively versus the S&P 500. And ultimately, as the VIX pulled back, and even saw a negative reaction to the spike up in the VIX on the GDM, but as the VIX came off, the S&P 500 finally found a bottom, and then money was just rotating into gold, the miners, etc. Fast forward to the financial crisis. Excuse me one second, folks. We saw a spike up higher, all-time highs on the VIX. We haven't even hit it yet during this sell-off. And we saw the gold miners get whacked over the head. But then, as the VIX came off, double topped out, what did the gold miners do? They ripped up to new all-time highs, while the S&P 500 continued lower. Ultimately, as the VIX came off, the S&P 500 found a bottom, and the two rallied in tandem. But you had brief periods here, not so brief. We had a couple of year divergence here of the gold miners and the S&P 500, a brief period back during the financial crisis. But here we are yet again with history repeating itself. And we're spiking up higher on the VIX, S&P 500 selling off. But will we see a sell-off on the VIX? That's what we're looking for. Here's the VIX in candlestick. Here's how we closed out, or poised to close out the month. So the question is here, as we go back during the same time frame with the gold miners highlighted in gold, the S&P 500 highlighted in blue, what's the magical number that we need to hit on VIX before the gold miners rally? That is what I'm going to be putting in the forum with members tomorrow morning, because I need to do that analysis tonight, and members expect that tomorrow morning, because we'll be looking for that number, that magical number. It's not going to be an exact number. It'll be a range, but it'll be a number that we feel comfortable with, that the VIX will be pulling back and we'll be looking to add to our gold mining trade. So more to come there. Now, when you take a look at the daily chart of the VIX, do I have it up here already? This is definitely not a daily chart, but close enough. This is a monthly chart. You can see that we are still overbought. This purple line here is the 5 standard deviation Bollinger Band. We're still kissing it. So we're still elevated here. But when you take a look at the daily chart of the VIX, we remain in a very, very precarious situation. The VIX can still break out here, and it is threatening to at current. So if we break out, we may take out the highs of 2008. That's what worries me. So long story short, what we're going to be looking for before we add more to the gold mining trade is the VIX. That's the secret to it all. We're going to look at that magical number, and we're going to look to see where the VIX needs to hit before we see rocket fuel get sent down into the gold mining stocks, and they begin to take off along with gold and silver. Let's take a look at some questions here. Anything? Just basically comments. Colmex recently announced a smaller gold bar available to take delivery of 100 ounce. That's interesting. Don't want to interrupt, but do you see the lawsuit notice against BDX? No, I did not, Jay. When was that issued? All right, let's go back to the futures. I want to take a look at the dollar. You know, in times past, this time last year, if the dollar were this weak, you'd have seen the gold miners rip through the ceiling. Hardly a flinch. That's what makes it so tricky to trade the gold miners. So we're off the session lows, but we do have a new weekly low on the Dixie. S&P 500. We're struggling to fight back here. All looking good. Craig, you should be feeling good about sitting in cash, brother. So we're going to be looking to see whether or not this support level here at around 24.28, whether that can hold. If it doesn't hold, this market's in all sorts of trouble. Let's take a look. We just got done talking about the gold miners. Let's take a look at the GDM. Nothing happening here. Bitcoin. Bitcoin was actually looking pretty good earlier. It was consolidating here, and now it just gapped down. Hammered. Gold. Gold is gaining steam here. The VIX. You saw a late day surge on Friday in the VIX. Now we have follow through today. It would be great to see a reversal off of this gap up. The Nasdaq down 1.5%. Off the session lows. This needs to become support. I'll be honest with you, folks. Given the feel for the volatility this evening, I think they're going to try to limp this market back up again. It's an election year. And they are throwing the kitchen sink at this market. Not that I think it's good. I think it's horrible longer term. And while I'm thinking about it, if I could ask you folks, please hit that like button. Please, I beg of you, hit that subscribe button. Thank you very much. All right. Let's do some chart requests. All right. Let's go to TBP. Turning Point Brands. Monthly chart. Megaphone formation. We're at the bottom of the lower band of that megaphone formation. Interesting. Possible double bottom setup forming. This is certainly not a stock I would buy right now, but certainly one I would watch. Weekly chart. Problem here. Problem. All right, so we broke down the week of the 9th. We've rallied back. Now we're flirting with an attempt to try to recapture support. This is unpurchasable to me. It's persona non grata. Unless, of course, it closes above, let's call it $22 per share. It has to close back above the support level. It could flirt with this resistance level, which was support for a couple of weeks, but you're running the risk of it rolling over, not having enough rocket fuel to get through this resistance level. The indicators look okay, but I'm not loving the price action. And I would be very, very careful. And this is why I always warn, especially during a bear market, don't buy early in the week a stock you're looking at the weekly chart to send you a signal. Meaning, we're waiting for TPB, a weekly signal, to close above resistance. That might have looked great on Monday, Tuesday, Wednesday, Thursday. All of a sudden, by Friday's close, you're back down below that support level. If you would have bought back up here, you're sitting down here and you're feeling really, really bad. So wait till Friday. Know that it's going to close above resistance. You're going to have to pay up a couple of bucks. So what? At least you have peace of mind and you know exactly where to put your stop loss point or your stop loss order. Now, if you bought on Friday, if you bought on Thursday, where do you put your stop now? Right? It's in no man's land. It's a poor buy. Daily chart. Looking at the daily chart, not looking good. You have lower highs. You're in a descending wedge formation. A lot of volatility here still to go. I would have to say avoid these shares. As I started out with, they're purely a watch at current. The next chart up is VICR. This is a monthly chart, lower high. This green line here is critical support because if we break it, and that low is at 26.50, if we break and close down below 26.50 per share, you're in a confirmed downtrend. Weekly chart. All right, so what we're seeing form here is a bear flag setup. All right, we can limp up higher here, another 2 weeks, 3 weeks, whatever. But as long as we keep flashing these topping tails, the threat of us rolling over and breaking this lower band of support is very good. To me, this is setting up to be a short. All right, this is what I look for. I look for bear flag setups. I look for a break of support. In all probability, we're going to break to lower lows. And that monthly support level, if we break down below it, you want to lean into the short side because you're going a lot lower. Daily chart. Not much happening here. No reason whatsoever to buy. If you're looking to buy, you have to buy these shares. You need a reason why. All right, I'll give you a reason. You know, if you close above this upper band of resistance and you're going to swing trade it, you know, so be it. But I'll be looking at that weekly chart because that is key. This would only be a very, very short-term swing trade on a breakout. I'd be in and out of this thing. I'm not even going to save this. I'll go for 1 day. I'm not really interested. All right, what else do we have here? EGRX. Eagle Pharmaceuticals. All right, so this is a broken stock. We were in a very tight multi-month consolidation, multi-year consolidation. We broke that support level in blue in October of 18, and this is what I warned. This is what I wanted. This is exactly what I'm concerned about here, is seeing this. You get an ascending wedge formation. You feel like you're going to get a breakout. What happens? You roll over. You break that apex. It's exactly what happened here. We broke down. Everybody thought we were seeing a recovery. It was a head fake. It was a bull trap. Now it's broken down. We're going a lot lower here. Avoid like the plague. New weekly low. This is a short all day long. Weekly chart. Same deal here as with VICR. You think the shares are recovering. They're not. It's a trap. Bear flag setup. Topping tails. You have an up week. You think all is well with the world. All of a sudden, you roll over. This is setting up as a short. Daily chart. This is already concerning, right? We already broke a support level. Here, there you go. We were limping up, broke down, bearish reversal bar on Friday. We closed down below support. In all probability, we are going lower. I would avoid these shares and quite possibly a short. What else do we have? Eric, Halliburton. Eric, one of our new members. All right, so Halliburton I went over a couple of weeks ago. And the easy money has been made here on Halliburton. So we were in a descending wedge formation. We broke the lower band. We became very oversold on a day. I'm going to go to a daily basis before I go to the weekly chart. You saw RSI very oversold, down below, I believe down below 10 at one point, if memory serves me, like 9. Yeah, it was below 10. So very oversold. We have a dead cat bounce here. I think that in all probability, especially given the fact that they're going to be using tankers to store oil. They're running out of capacity to store oil, the oil that's out there. So why do you need an oil services company right now when you have a glut of oil? I would have to say avoid these shares at current. We'll take a look at the weekly chart. All right, so we can, do as we did with these other charts and limp back up here. But all I'm going to be looking for is a reason to short it. So I think ultimately we're going to roll back over here on Halliburton. It's simply not, energy when you go into inflationary times, into recession, becomes a sector you want to be a part of. It's just not time yet. It's just not oversold enough yet. So I would avoid energy at current. I would avoid Halliburton in particular. I think that in all probability we are going to head lower. STNG. Oh, Boeing. I had no idea how right I was going to be on this one. Let's bring up Boeing. I reviewed Boeing. I did a video on it, as a matter of fact. It's on YouTube. If you check my videos, I think it goes back to either January or February, one of the two. Boeing. All right, so I did the video. We hadn't broken this neckline. I did it back here, I think. I was December already. Wow. So last I spoke in great detail about Boeing was when we were topping out. We had a classic head and shoulders setup. I said it was a short on a break. I had no idea that I was going to do this. I'd be a liar to say that I thought that we were going to crater like this. Who'd have thought Boeing? But it happened. So we'll begin with a monthly chart. And at current, believe it or not, I'm going to change this 3 standard deviation Bollinger Band black, hopefully making it easier to see. Yeah, you can see it. So at current, our price on Boeing is still down below the 3rd standard deviation Bollinger Band on a monthly basis. So very, very oversold. And I mean, this is a buy of a lifetime down here at $86 per share, $89 per share. So where to from here? I think that we could still limp up higher here. But frankly, I think that we're just going to be setting up for another short. So our peak of last week was previous resistance and support going back to 2017. We can rally, I think, up to 222 per share. If this market gains its footing overnight, we rally back, the VIX comes off. And remember, the VIX doesn't have to go down to the teens for the stock market to still continue down. The VIX only needs to stay elevated, and the stock market can still correct. So we really need to see the VIX come off considerably. But if we're going to see new higher highs this coming week, I think that my price target would be 220 per share, and that would be a reasonable expectation of as to where the stock could go. Let's go to a daily chart. All right, so I spoke about this on Thursday evening, about bear market rallies and where we were at current. And here is the gift that the market has given you. A data point. So what we're able to do now, because now we are short sellers, all we're looking for are opportunities to lean into the short side. Because what are we in? Are we in a bull market? No, we're in a bear market. We want to get over that mindset of being in a bull market. That's done. It's over. Rest in peace. So I mentioned on Thursday, using the spiders, that the 20-period moving average would act as a declining ceiling on the major averages, on whatever you're trading. Cupcakes, I don't care. You're going to get a resistance level. Technical traders are going to look to lean into the short side. People that are in need of liquidity, they're going to look for a technical reason to sell. This is a technical reason to sell. Now what I do is I take my crayon out, and I could look to possibly get short at this resistance level, and I know exactly where to put my stop on a new weekly high. So I can't buy these shares at current. If we pull back, we begin to put in what appears to be a higher low. Then we begin to break out on a 2-hour, 4-hour chart. Then I would entertain getting long of Boeing. If we gap up higher this week, we shrug off the futures overnight. It's quite possible. We gap up, we pull back, we do a retest of what was resistance. This blue line here may now act as support. If that happens, Nibble, stop loss right below. We break out to a new weekly high. You add more, and then we go up to that 220 mark. And then you get out. Get out. It's a bear market. You sell the reps. So that's Boeing. STNG. I'm going to link to that Boeing video at the end of this video for those that are interested. When I publish this video. STNG is Scorpio? Okay. I'm thinking salt for that other tanker company. All right. So we were talking about Scorpio not too long ago. When we were oversold. This is actually looking pretty good. Let's go to a monthly chart first. If we close positive on the month, that would be a very, very bullish event. Then I'd be looking for a breakout above this resistance level. I'm liking RSI, higher lows. These Stokes are still very, very weak. And they're down below 50, and rallies tend to fade. So I'm still very skeptical of Scorpio. Weekly chart. We broke out here the week of the 9th. Pulled back, retested, held. Last week, we did a new weekly high. Higher lows in RSI. Stokes are hooking up. We were in a downtrend channel. That ended on Friday. This is a daily chart now. What we'll probably do on Monday, Tuesday is pull back and do a retest of this support level. Damn, man, these shares tripled since I was last looking at them. Damn. Not tripled. I'll buy a third. Let's check out a 4-hour chart. It's looking good here. I mean, I want to talk bad about it, but I can't. It looks good. You break out above 20, man, this thing's going to be en fuego. So I like it. STNG looking good into the coming week. Halliburton we did. ABT holders. I'm going to go. I have 1 more minute left to go. I want to make sure. That's it. Salt is bulkers. Thank you, Eric. Let's bring up salt. Not looking as good as Scorpio. It did break out on a daily basis, though. Here, this is what I'm looking for on Scorpio. We broke out here. On Friday, we did a retest. Oh, this is Scorpio. What happened to my chart here? Oh, there's 2 different companies. Gotcha. All right, that's why I got confused. That's why I got confused with the symbol before. All right. Okay. Let's see. Just made a fool of myself live. ABT, Abbott Labs. Okay. All right, so it's a broken stock. The first thing that comes to mind is, we broke down in February. What do we do this month? Rallied back in an effort to try to recapture. We were trading above it. Everybody that bought here, it was a bull trap, classic bull trap. This is what I worry about. I'm going to keep pounding the table on this until ultimately we roll back over again and head down lower lows. We are in a bear market, folks. Don't get lured in. Don't get lured in. You're going to hear Kramer out there. Just don't get lured in. The charts will tell you when it's time to buy. It's not time to buy. They say the VIX is high, you got to buy. Yes, you nibble. And then you add more when you're right? You nibble right now, and that's it. Weekly chart. So we rallied green. We rallied off the lows of the week, closed positive. So we did flash a topping tail automatically. That's my resistance level. All right, so I wouldn't look at this stock as a buy until I saw a close above 77.81. What was the high last week? 77.50. All right, so use 77.50. But I need to see a close on a weekly basis above this resistance level. Would I buy it on Monday if we open up at 77.80? At 79, if we open up at $79 per share on Monday, Tuesday, Wednesday, Thursday, I'm not buying it. I'll pay 80 on Friday, 3:59 in the afternoon, send out a market order and pay more for the luxury of being right? Nibble. And then I wait for a pullback and a retest. If it holds, I'll buy more. That's how you trade in a bear market. Not hoping that we have recaptured the support level by Friday afternoon by buying on Monday. You're going to lose your shirt. Please don't do that. Let's circle back with the futures, and I'm going to say goodnight to everyone. Unless things are really bad tomorrow morning, I'm probably not going to do a swing trading today. The dollar gaining steam here. Let's check out gold. See if we're getting a negative reaction. We've pulled off the highs. But that could be because the VIX continues to gain strength and people will do what they have been doing of late, and that is they will liquidate what they can, and that includes gold to meet margin calls. And here's the VIX. We are up. S&P 500. Very close to a filling of the gap here. But we're down nearly 2% at current. Let's drill down here, 15-minute chart. We're trying to put in a higher low. Let's see whether or not we're able to gain some steam here. They're trying to hold it in. There's no doubt about it. The Nasdaq. Only when I'm live. Technical issues. All right. Nasdaq to try to hold in here. My drawing tool is not working properly. There we go. All right. If we break below support here, we're going to probably take out the lows of the session. But they're trying to put a bid under this to keep it going. The Russell. So it's gloomy at current, no doubt about it. But they're trying to fight back here. You know, we're not limit down. I mean, the volatility that we saw, what, only a week ago, 2 weeks ago, I mean, it's nowhere near as dangerous a market, I think. It's only dangerous if you believe that we're back into a bull market. If you have cash on the sidelines and you're prudent, you'll do just fine. There's a lot of money to be made here. There's a ton of money. It's a matter of that VIX coming in and watching these head fake setups occur across the spectrum, whether it be Tesla. You know, take a look at Tesla. Somebody asked me about Tesla earlier. Didn't somebody put a $1,000 price target on this not too long ago? So at current, we run the risk of closing down below key support. And that's at around, where do we close? Around 527. So we need to rally back and rally back really, really quick on Tesla. Weekly chart. We remain in the triangle formation. Can't buy these shares. I think the bias is still going to be to the downside. Daily chart. All right. It's in no man's land right now. It needs to rally back to 527 or else Tesla's in a whole lot of trouble going into next month. It needs to recapture support. All right, folks. Everybody have a great night. If you can hit that like button, I'd really appreciate it. Thank you very much. Subscribe to the channel. Thank you. And appreciate you spending the Sunday night with me. And please be safe out there. And I'll talk to you soon. Be well.